Welcome back to the channel. A lot to unpack, a lot to talk about this week, especially around what could be happening with fixed rate mortgages, what's happening on the housing front. Recent article by Mike Moffatt talking about all this fluff when it comes to politicians and all these bureaucrats talking about housing. And more importantly, what we're seeing happening right now, real time in the mortgage and real estate marketplace from this particular desk right now. Ultimately, we'll talk about that and more this week. Once again, thanks for stopping by. If you have not yet subscribed, we invite you to subscribe to the channel, hit that notification bell so you can stay up to date with everything that's happening. Don't forget to leave your thoughts, questions, and concerns down below in the comment section. Like and share the video. Let's get right into it. Ultimately, right now with fixed rate mortgages, we haven't seen any of the major banks move their rates just yet. We did talk about it a while back that banks had increased those rates slightly as those bond yields had ticked up and stayed hovering over that 3% threshold. Now with them sort of sliding below that 3% mark, if we continue to see this sustained movement downwards, this downward pressure on these bond yields, we could potentially see the banks reduce their policy rates, or those fixed rate mortgages, I should say. Hopefully, talking about policy rates, we'll see what happens in September on the 17th when the Bank of Canada meets again. But ultimately right now, variable rate mortgages not moving too much. Actually pretty static, but more on the fixed rate sides. We're wondering, a lot of Canadians who are approaching mortgage renewal, those millions of Canadians that have a mortgage potentially coming up for renewal in 2025 and 2026, wondering what's going on with rates, getting a lot of calls and questions about that. We will be doing a mortgage rate update shortly once we get some more consistency. But remember, there's a lot of volatility, a lot of uncertainty. That's driving pressures in the U.S. Treasury market, which is obviously translating to potentially higher or lower bond yields here in Canada. So we'll see how that happens. Stay subscribed to the channel if you want to stay up to date with that. Let's move on to this interesting article talking about Mike Moffatt. Our leaders keep talking about the housing crisis. So why on earth are we building fewer homes? I mean, ultimately, this is the question we've been asking. This is something we've been advocating on the channel. For those of you who've been subscribed for a long time, we've been talking about, all this fluff, all this BS talk by politicians and bureaucrats about housing. I've always said it. People want to talk about affordable housing, but nobody wants their house to be affordable, especially once you're an owner of a piece of property. You don't want things happening in your backyards that could decrease the value of your home. Ultimately, this is a very interesting, brings up a lot of key points that we've talked about on the channel before. I will link to the actual article in the description box below, as well as down there, you will find access to our free app that you can download with lots of tools and calculators that can help your home buying or restructuring, refinancing journey, with obviously all the tools that you may need. So feel free to download that down there, as well as check out the article. But in the article, ultimately, we have this conversation, this push and pull against developers and builders, and ultimately immigration, the saga that we saw happen over the last little while. You saw all this immigration coming into Canada, but the infrastructure and the houses were not being built. And yes, you do have, major municipalities and governments that are facing challenges. They want to try to cut the red tape, but ultimately they lose out on billions of dollars in revenues that these developers are paying to the cities, which end up being paid for by the buyers of those homes. So as you can see, the cost just trickles down. And right now, as we see the problematic condo market in the GTA, ultimately we see how values are sort of pulling back. We see that in the single family space, not as pronounced as it was in the condo, or is in the condo space, especially here in the GTA. We're definitely looking at some major headwinds, and that obviously doesn't entice builders to want to get out into the space. Even if you incentivize them, if the margins don't work and the numbers don't pencil, nobody wants to build. Nobody wants to put up their hard-earned capital or the cost of borrowing, right? You're not going to go take out a mortgage, to go develop all this land and basically do all this work if you're not going to have end users and investors who previously were driving up those prices, and we're actually buying the units gone. If all those people are gone, so we're definitely building fewer homes. And this really begs the question, yes, what could happen in the future? Are we going to see home prices come up after they hit rock bottom? Have they hit rock bottom? Is there a potential for a further decline in home prices, single family or condos? I mean, arguably, I believe there's a lot more downside there for the condo market. We may see it slip another 5, 10, percent, maybe even more. I mean, realistically, we don't know. At the end of the day, are we going to have all these buyers coming back to the market? Actual end users when rents are dropping, right? Affordability, you may argue has not improved, but it has to some degree. Homes, condos, I know a lot of clients right now, and this is anecdotal, this is what we're seeing. I'm not basically saying this is happening across the board, but a lot of clients that we have talked to that were in a position a few years ago that were looking to buy, just discouraged by the process of not being able to add in a condition of financing, home inspection, so on and so forth. Well, they're sort of returning back to the market with stronger incomes, more down payment. Obviously, interest rates have come up a little bit, but the home prices come off significantly from what they were willing to spend just a few short years ago. And ultimately, right now, their family dynamics have changed. So they're really opportunistic right now to say, hey, you know what? We're tired of renting, or we're in a basement apartment, we're living with their parents. Now's the time to get in. And we always say to our clients, look, it's important to understand your qualifications. Don't buy more than what you need to. Obviously, when we do a pre-approval, we give you a ceiling. It's up to you whether you choose to exercise that ceiling or stay below it or well below it. I always say there's two types of approvals, right? There's the bank approval that's using your gross income at max numbers, and then there's the true number where you want to be. You can reverse engineer it, say, hey, this is how much money I'm willing to part ways with each and every month. Does it work? Can I manage to carry a mortgage at this amount? How much do I need to put down? What does it work out to? A lot of clients that we're working with right now, single, young individual, lots of entrepreneurs, a lot of people that are, really secure in their jobs as of right now. I mean, ultimately anything can change, right? Unemployment, all these numbers can change. But as of right now, they're looking at buying a condo, right? They're looking to say, hey, I was looking at these units, they were super expensive. Now I'm able to afford something under $500,000 for a single bedroom plus den. At the end of the day, they're looking at their numbers saying they still want to be a homeowner, right? They still want to ride that train of becoming a homeowner, building equity down the road by paying down their own debt. Rather than make someone else wealthy, they're going to do it themselves. And that is literally the conversation we're having, right? At the end of the day, these are people that are coming to us with their aspirations, their hopes and dreams. We're not telling people, hey, now go out and buy a home. But ultimately, as I said, there's opportunity for those who are patient in the marketplace right now. Now, ultimately, there's opportunity, but there's also the flip side for some Canadians, those who have purchased homes in the last few years, had top dollar, putting less than 20% down or 20%, just the bare minimum to get past the CMHC insurance default premiums. They are coming to us saying, hey, life had happened. This is always the case. Just a quick caveat here. A lot of people saying, Anthony, default rates are on the rise. Well, we have to keep a close eye on it. Yes, they could be on the rise. Are they going to approach 2008 GFC financial crisis proportions or not? At the end of the day, even through the great times that we had when rates were down and home prices were escalating, people were still defaulting on the mortgage, just at a lower percentage because they were able to refinance themselves out of trouble or sell into strength. Now, unfortunately, rates are up and prices are down. People are facing a little bit more challenges, and we're dealing with that. We're picking up those pieces where we best can. And if you've chewed up through the equity, if you've treated your home over the past little while like an ATM machine, just constantly levering up and really not paying anything down, and you're just buying all the toys that you don't need, then you could be finding yourself in a really precarious situation. Unfortunately, sometimes life happens. You're looking at different situations. Maybe you had to use your home as an ATM machine because of a life event. You're off work. You were diagnosed with something that caused you not to be able to work. You needed to figure something out. If you maxed out that leverage, it's very challenging right now for a lot of Canadians. A lot of mortgages in the private space, a lot of things are happening. As I said, don't want to paint the gloomy picture of the situation right now, but there are lenders that will help if there's equity in the home, if there's ability for them to manage their debts and make those payments. But in reality, you have opportunity, you have obviously some situations that are not as great, and ultimately only time will tell how this all plays out. Are we going to repeat the 90s? Is home prices going to stay static for the next 10 or 15 years? Are we going to see home prices come off? This is literally the question. Nobody has a crystal ball. We can all pretend to predict the future and say, hey, if this is what we think is going to happen. But at the end of the day, what we do know is history repeats itself in these regards, is everything comes and goes in cycles, right? So we have boom and bust cycles. Let's just hope that a lot of our clients that we work with are not in these positions and have taken and yielded the advice that we've given to them and say, hey, when you're going through this process, buy the house less than you need, keep more money in the bank. Trust me, all the situations that we work with on clients that we're looking to refinance, the common denominator is always they've had kids, one person's gone off of work, whether it be maternity or paternity leave, or both at some point within that time frame, and they have an extra mouth to feed that incurs. So ultimately, at the end of the day, you use credit cards, so on and so forth. Just plan for that. Talk to a mortgage professional, talk to a financial planner, talk to someone about the best strategy when you're thinking about getting into a home. Make sure you're having all those things, all those considerations laid out on the table so that you can make the best and informed decision. As always, if you're looking for help, you're looking for guidance, feel free to reach out to our team here at InTouch Mortgage Solutions. Always more than happy to help, spend some time talking with you about your situation. But let us know what you think in the comment section below. Make sure you're subscribed to the channel. And until next week, thanks for stopping by.